It's Monday, and that means another week of FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Luke Falasca giving us a broker update. But first, we have the Sultan himself, Zach Strickland, making his return with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Zach Strickland on this lovely President's Day. Hopefully everybody had a great weekend. Let's jump on into our tender rejections and see what happened. So not a lot changed over the weekend. Our outbound tender rejection index for the United States remaining relatively flat, 5.64%, 5.64% on the tender rejection rate over the weekend. Not a lot of movement there. We're in this holding pattern. We should hold here throughout the week, kind of hovering, etc. This time last year we had a similar condition. If you can see all the way back here, we kind of bounced around in February. I expect a lot of similarity between this year and last year, especially since we're seeing similar volumes. If we look at the outbound tender volume index, about 1% or so higher average over the last 7 days or so versus this time last year. So keeping this in mind, we expect relatively stable conditions to persist throughout the United States for the next couple of weeks or so, maybe until we hit March. That's really where we start to see things kind of churn up a little bit. So let's look at our weighted rejection index map with some weather overlays on top of it. Underneath here, we've got our weighted rejection index here in the blue. These are going to be the areas that are going to be the most relevant to look at in terms of capacity tightness. Anything in the red is going to be the ones that look at in terms of the loosening markets over the United States. So Salt Lake City, for instance, up here around Pendleton, Oregon, they're starting to get a little bit looser. Anything in the darker blue here, and this is the area that I'm going to focus on today, this I-70 corridor moving across the country here. Starting in about Denver, working its way into Kansas City, Indianapolis, connecting all the way through. We kind of hop over the Pittsburgh market because it did have a lot of volatility over the last week or so, and then ending finally in the Baltimore, Maryland area. That's the I-70 corridor. So you can see that this blue really follows I-70, which is intense freight volumes in general throughout the United States. Denver being, considered more of a softer market overall. A lot of drivers go in, they don't come back out. A lot of weather conditions impacting this area. So this is the one that I want to focus on today, but it is important to note throughout this little corridor right here, which is really a big corridor for freight movement across the country, starting out here in Utah, comes all the way across the country here, but hits some bigger markets like Kansas City, Indianapolis, and Baltimore, Maryland. So let's look at the Denver market and see what has been happening. So I've got the outbound tender volume index for Denver overlaid with the outbound tender rejection index for Denver. And you can see here over the last couple of days, this outbound tender rejection index has jumped all the way up to 16.35%, which is actually pretty elevated for this market. You can see back here in September, August, October, some of the fair weather type months of the year for Denver really hovered right down here in the low single digits, about 2.5–3% tender rejection rate for the majority of the year. But as we've hit these winter weather months, the tender rejection rates have started to elevate quite a bit. Tender volumes have actually slid down out of this period of time. If you're looking at the long run trend, tender volumes are averaging about 10 to 15% less than they were over the summer. But still, tender rejection rates are elevated, and that's because a lot of winter weather has hit this part of the country here in the last month or so. It's really hard to predict the weather in this type of area, especially at elevation. I-70 shuts down quite a bit. We had avalanches last week, etc., and they're expecting a lot more weather to come down across the country here and start to impact this area a lot more this week. So you need to be careful. You can see tender rejection rates through all lengths of haul are being disrupted. So these are all green except for this tweener one right here, which has fallen down just a little bit. But all of this means that carriers are rejecting more freight coming out of this market than they were, and it's not just isolated to a single lane. So if you are heading into the Denver market, make sure that you elevate your rates out of the spot market there. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke, and happy President's Day. We're going to be taking a look at some of the broker data that we have in SONAR today to tell you what's going on. So we're looking at something a little bit different from how we typically view. So what you have behind us in blue is the outbound tender volume here in the United States. So we're used to that, but these other lines, this orange and green line, is actually where things were over last year. So we're looking at the seasonality change. So the green line is going to be last year's volume levels, and the orange line is going to be 2018 volume levels. So you can see here, right where we are here in the middle of February, that blue line is ever so slightly above the green line. That's good. That means that we are a little bit higher than where we were this time last year. So we're pretty much right about where we expect. But volume levels should, if they go anything like they did last year, should start to see an uptick here over the next week and a half to 2 weeks. So do keep an eye on that. So this is a really good time. Pound the phones, get some customers, because there will be more freight to move here over the next week and a half to 2 weeks. And then you can see here the trend over the last couple of years. A couple of those big dips there, just your holidays. But for the most part, if things continue the way they started out, you should see a pretty good year volume-wise. So let's go ahead and take a look at the rejections. So same viewpoint here. We've got in blue all the way down here, you've got rejections sitting at about 5.5%. So very, very low, still pushing down. But we see this yellow line here is 2019 levels. And again, we saw the same thing, a big dip after the holiday of the New Year's, and it pushed down. Similarly here in 2018, that green line, it pushed down eventually before going back up there a little bit in the spring to summer months. So you might start to see a little bit more softening on rates before they start to head back up. So we'll keep a really close eye on that to see how much of a push that tightening does here in those summer months. We're going to be looking at a little bit of a different data set today that could be potential to be a forward-looking set. It's our tendered lead time. So one of the things that we measure is the lead time, or how many days in advance shippers offer their freight to carriers or brokers to move. So can that be a forward-looking measurement of what is to happen? This map here behind us, the the green markets, are how far in advance that shippers are moving freight. So if you see a big increase and shippers start to give more lead time to get their freight covered, it may mean that they're experiencing some tightening or potentially think there might be some tightening to come. Versus red markets are softening. Shippers are giving less time to get their freight covered, meaning they're not worried about it for whatever reason. So this is a really good, interesting look at what shippers are thinking. So one market we're going to take a look at here is Salt Lake City. So in blue, you have the tendered lead time. That is in days. So if you go all the way over here on the right side of your screen, you see 2.89. So about 2.89 is how many days in advance shippers are offering their freight to get it covered from their brokers and carriers. This green line is the tender rejections over the same period of time. So you can see, as this blue line, that's that lead time. As that lead time continues to creep up, the green line here will follow that along the same pattern, meaning you'll start to see rejections increase after lead time increases, and we all know that pricing follows that. So this blue line, we're looking at this because you see a big spike from 2.5 days to almost 3 days lead time over the last few days. So that could be an interesting metric to look at. If you're moving freight out of Salt Lake City, be on the lookout. There might be a big increase in rejections coming for whatever reason. If shippers are experiencing some tightness or have a lot of freight they're experiencing or about to move and they're a little nervous about it, take advantage of that. Go to your shippers, let them know you have capacity available and you might win some freight. I'm Luke, and that'll do it for today's broker update.
And that's going to do for this Monday edition of FreightWaves Now. Thank you so much for tuning in. The fun doesn't stop. We're always streaming around the clock on our FreightWaves TV app. Also, if you're looking to find out a little bit more about all of our offerings, check out our new Passport program, and we'll see you at one of our shows. Thanks so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war.
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.